This is Rod Kusin and Spooman for Risk on March 1st, 2019. All times on the chart are Central Standard Time. We are looking for a long trade. And where is it going to pivot? Our automated strategy was shorting this move up. But now we're getting down to the area where we should be looking for a long. And the strategy, for some odd reason, gave us a long signal here. I cannot confirm why. That was very bizarre. But for some reason, it did. I would never agree to that. I wouldn't take that kind of a trade at that particular moment. But all the same, we have been short throughout the course of the morning, and rightly so. Nonetheless, we are now poised for a long. And the strategy set off its first set of long trades right in here, which has proven to be successful, but I don't believe that we are quite ready. Now, our approach to the market is based primarily on reading the premium. And if you haven't figured that out yet by watching our videos, please come to realize that's what we are all about, reading the premium. In my almost 2 decades of working with the market, the premium is the most effective indicator for understanding how the market will behave. So all of our videos are about reading the premium. Now, let's go and take a look. When we read the premium, you can read the premium using any interval that you wish. But by gearing it up to read the premium using a 50-tick chart or a 5-second chart, we get we get the most bang for the buck, if you will, by understanding how to read the premium on a chart that is moving very, very quickly, but we adjust the moving average on this so that we have a good picture of the overall moves of the premium. So yeah, we use a very fast chart. Most people think that's ridiculous. Well, that's because you don't know how to read the premium. Let's talk about how we do this. Now, fundamentally, when it comes to reading the premium, you have to understand that there is a direct relationship between the highs and lows of the Spoos and the highs and lows of the premium. So that means that when the Spoos are moving up, you're getting higher highs and higher lows. The same should be true of the premium. If the Spoos are moving down, you're getting lower highs and lower lows. And the same should be true of the premium. Now, having said that, when that is not the case with the premium becomes a leading indicator. And for that reason, you can then anticipate how the market will behave. It is just that simple. You gotta know the concept. So when that's not happening, you know something's going to change with regard to the spoos. Now, this morning, yeah, it was a little bit tricky. All that having been said. Okay, let's take a look at the overall picture. Now, um, what we have on our chart here are several indicators. One of the first indicators that we've placed on the chart is an indicator that will show us if we're getting any new highs or new lows for the day on the premium. That is what we have here with regard to these green and yellow dots on the high or low of the premium bar. So green dots mean we're getting new highs. Yellow dots mean we're getting new lows. So as the market was moving up from the open, yes, of course, we have to get some new highs. All right. We have to get some new highs because the premium obviously is going to be moving up. But after about the first 5 minutes or so of the open, we really want to start looking closely at what the premium is doing. So now what do you see happening here? The market moved up, but as it moved up, the premium moved down. Okay? Now we said there is a direct relationship between the moves of the ES and the moves of the premium. Now, being that the premium was moving down as the market was moving up, the premium becomes a leading indicator. So the premium is saying, yeah, the market's moving up, but I'm moving down. And guess what? You're going to do what I want to do. The premium is moving down. That means the market's going to go down. Okay? That's what it means. So the premium has now told you this market is not going up, it's going to go down. And what do you see happening? Yeah, the market moved down. Indeed, it did. So we can look at the big picture on the premium, and we can look at the incremental micro movements of the Spoos by way of using the premium as well. So ultimately, you're going to be using the premium to make the decision of exactly where to pull a trade. And yes, you can do that. And we've already automated that process for you through our automated strategy. Now, let's go ahead and take a look at the areas today where executing a short trade made good sense. All right, so let's first of all talk about some important things regarding the premium that if you don't know it now, you're going to know it, because the premium is based upon the difference between the cash index and the futures. Now, that being the case, we're working with the S&P 500. Okay, that means that all 500 stocks do not open all at the same time. So you can't get an accurate premium read during the first few minutes after the open. It's not possible because not all stocks open exactly at the same time. So if we give it a couple of minutes, generally by then we've got an accurate premium read. And that's why you don't see the premium being generated on this chart until 2 minutes after the open. That's just how we've set it up. Now today, on the 1st of March, the premium read was pretty accurate, really, even from the open itself. But nevertheless, this is a fundamental principle. You can't use the first couple of minutes typically, because not all stocks have opened exactly at the same time. So that's why the chart does not propagate the premium for the first 2 minutes, and we've just set it up that way. Okay, so we get a little bit of a move up, a little bit of a move down, and then we start reading the premium and we start getting new highs on the premium. But as we're getting new highs, we're also getting new lows. Now, what did we say? There's a direct relationship between the highs and lows of the ES, the Spoos, and the highs and lows of the premium. So while, yes, we should be getting new highs on the premium because the market is moving up, we should not be getting new lows. This bar on the premium makes no sense. This is a new low for the day. This is a higher low. What does that mean? It means the market needs to come back down and test that level. And not just this level, but that level. Okay? And even this makes sense because you have nothing else to compare it to. That's a new low on the ES, it's a new low on the premium. But that doesn't make sense. Neither does that. And as this is going up, neither does this. Neither does this. Okay. This low corresponds with that bar. It's bar for bar. New lows on the premium when you're having higher lows on the ES, all that means is that this market is going to reverse. And when it reverses, invariably, you have a divergence on the premium. That means if you pivot on a new high, that means you've got a lower high on the premium. If you pivot on a low, it means you've got a higher low on the premium. Premium 101. Go to our website, you can read all about it. So, as this market is moving up, are you getting new highs on the premium? No, you're not. No, you're not. You're getting lower highs. Okay? Look at this. All right? Look at these highs on the premium right in here. Lower highs. Look at here. All right? Now, granted, these are higher than they were over here, but all of the same, comparing this high on the premium, okay, to this high on the premium, on the average, you see we're at a lower high. So we've used we have an indicator here that will tell us anytime that we have a new high on the ES but a lower high on the premium, we want to measure and display the exact level of the premium at that point, which in this case was 79. Okay, all I have to do is just read it there. premium high 79. So we know that we're divergent there, and you can see it obviously right in here on the average. So if we haven't already taken a short over here, we definitely want to take a short over here, because we can see the premium has told us this market is going to drop. There is no indicator that we are aware of which will tell you in advance what is going to happen next. The premium is one, and perhaps the only one, that will do that. And this is your indication. Yes, this market is coming down. Okay, so you look for divergence. And when we look at we've used a simple moving average, okay? It's a simple moving average. And it gives us so much information. So we look at this initial high, 2808. We tag it here, 2825, 280825, pardon me. All right, where's the premium here versus where is the premium here? Oh my goodness. You see? You've got a huge divergence here. So yes, you ought to try to short this. And you can see the various short trades that are being generated by the automated strategy at the top of this move. These are automated trades. But you need to read the premium to validate those trades as well. So just moving forward, you've got divergence in here. Now we come up to this high, which is a lower high. We should be at a lower high on the ES on the last bar prior to the pivot. We measure it right there. And you see 79 versus 78. That's dropping. And yes, indeed, we have another opportunity to short. Look at what's happening to the highs of the premium. Okay, we're all dropping. Now, we get this huge, absolutely huge drop on the premium right in here. We get a new high here, but we also get a new low. And that's not quite shown because I've expanded it. Come on. Okay, there's your new low. So further confirmation that this market is really going to drop. Now let's look. We'll look at this new high here. That means that that price level really ought to be tested. We need to see divergence on the premium at this particular price on the ES. So this is at 2806. We get this new high, 2806. And what do we see happen right over here? 2806. And where's the premium in relationship to the highs? It's over here. Lower high, the exact reading, 94, compared to this new high here. There's your divergence. Boom. we drop again. Get the point? That's how this works. It's beautiful. All right, but we got a long way to go before we're really going to turn and come down to a level where the price of the Spoos is sufficiently well, I won't say sufficiently divergent. I'm sorry, I should not have said that. That is not how this works. There is divergence. Divergence meaning if we're going to go long, we've got a lower low on the ES and a higher low on the premium. It doesn't matter how much divergence there is. It just needs to be divergent. And when it's not, it's predictive. Now, it's going to take some time before you see the proof of this, but look at how, on the average, the premium has moved from this point here, okay, to this point here, all right, right as this begins to turn right in this price range, all right, we see that this little high on the premium associated with this specific price on the premium 0.84, right? We're divergent there. It's not really meaningful, but just as a point of reference, where this turns, the ES is at 2804.75 when the premium begins to turn down. Okay, it had moved up. Okay, it had moved up to this level, and then we see the premium becoming divergent again. What does this tell us? This tells us that that price of 2804.75 will be tested. That means that this market is going to turn. It's going to rally back. And 2804.75, okay, it's going to come back to. So once the short is over and you go long, you don't even want to think about taking profits until you get back to 2804.75. I know you don't believe that, but we're gonna prove it today. Okay, we're gonna prove it. And just so you know, that's where the market is right now at 93. We're going to come back to 2804.75. That number just happens to be coincidental. Now let's take a look again at the big picture here. The lowest low on the premium on the average was right in here. Okay. Now, the premium has to be divergent in order for a major pivot to take place. That means that on a long trade, we need to see a lower low on the ES, but a higher low on the premium. Where do you first see that happen? Look at this. That means this is the low, all right? We've got to go lower. We do. We go lower here. Where's the premium? Higher low. Okay, so this meets the first conditions. that would suffice us to say we should be looking at a long trade in here. Now we're not quite low enough, which turns out we don't know that in advance, but we need to go long here. And you see where the premium is here. Look at this move on the faster moving average. This low, so we don't want to go low yet. We don't want to go long yet. We've got to be at a higher low. That's right here. That's where you go long. It makes a few points on the move up, but then you see what's happening here. At this high here, we're not getting a higher high on the ES. Pardon me. We're not getting a higher high on the premium. We're getting a lower high. Look at this compared to this. Okay, not good. It starts to come down. And as it comes down, and we don't hit a new low yet, but we hit we do not hit a new low on the ES, but we hit a new low, comparatively speaking. This low, this low, this low, this low. Okay. Premium is going down. So you know, we're not good here. This is not good. The premium has told you that your long trade isn't going to work. So while the market now rallies up a bit and tests these highs at 98.75 and ultimately 98, what is that? 98.75 again here. You know that that low has to be tested. So what do? You watch the premium. Now the premium gives you a beautiful picture of what is yet to come at this particular point. Look at how high the premium is here. Now you know you got to go lower, but the premium has now gone up. That means that when this thing drops, you want to go long. Okay? That's what it means. When this drops and you get the divergence you're looking for, you want to go long. So just as you already knew this was going to go up, this further confirms that you're going to go up. Of course, you're not going to stop there. You're not going to stop until it gets way back to this price. In fact, even better than that, because you got a huge gap in here. On a 5-second chart, there is no way that a 5-second chart is going to leave a gap there that's not going to get filled. That's a true gap. And we play that game as well, but we'll talk about that later. All right, so you know it's going to drop below this level, and in fact, very likely that it's going to drop below this level. Which of course it does, as you can see here. Now, let's look at where we're going to go long. Now, we already said that that price on the ES associated, look at the low pivot on the average. That's a lower low. Then you come into this higher low on the ES and look at the premium on the average is a lower low. So all of that is just telling you, yeah, this is coming down. So here's what we need to do. From, pardon me, from this point here, we now watch the premium. and we move down to this low in here. Okay, now this, comparatively speaking, is a new low. Compared to this is a new low. We need to be divergent. We're not really divergent here. That is a new low compared to this. So the next thing we want to do is look for a lower low on the ES compared to this, but a higher low on the premium. Where do you see that happen? You see it happen here. Okay, or here, or here. Well, not quite there, really right in here. And there you go. Now, look at this very carefully. Expand this out. Right. I want you to look at the JMA4 number, 39, 37. What's happening to the premium? It is still dropping. That means that this is not where you want to go long. The premium is lower. However, over here, you're at 44. Now, yes, now is the time when you can start thinking about going long. Now, this little move here, all right, with all due respect to the premium, look at this low, 22, associated with that particular drop. Now you're at 16 here, but now you're at 4 here. Okay, that's that raw number. You are divergent compared to this. That can work. All right, that can work, but it could also be tested one more time, or at least once. Nevertheless, you've got a divergent pattern here, and this is where you can go long. 5-second chart. Now, if that's going to succeed, what needs to happen to the premium is it needs to start going up again. Now, look at this. See that high? I know, we're working with a 5-second chart. Believe me, that makes a difference. You don't think you want to trade with a 5-second chart? Once you learn how to trade a 5-second chart, oh my goodness, you will be so far ahead. Anyway, yeah, premium has moved up here. That's very good. That's predictive. That's a naked bar. What do we mean by a naked bar? It means that at the pivot here, which in fact it does, it's a new high. It's predictive. If there's no divergence, it's predictive. That means we're going back here. 95.25. You don't even want to think about shorting until we catch 95.25 again. Now you've got a barometer for this initial move here. You've gone long. Don't worry about it. You got to get back there. Now, this little low, yeah, you need to be a little bit concerned about that. If you went long in here, That's going to be your first target. And the highs of the premium are dropping. Okay, here, 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 they're dropping. Okay, that's not good. That's not good for your long trade, because we already know there's maybe we're premature here. And this further confirms, yeah, you're not quite right. So we may go back down, we may break this low, but all the same, once you get into the long trade, you know that that is your first target. $27.95.25. That's your first target. So you hold this long trade until either you get stopped out or you hit 27.95.25. That's your first target. Okay, so we just have to play this out. All right. So just like we said, that is a warning signal, and we have a drop in the premium here. So yeah, we haven't gotten back here. This has been a lower low, a lower high on the premium. Shouldn't be that way. So yes, we dropped. Okay. Now we drop into a new low on the ES, 90.50. We've tagged it here. What do we see happening on the premium? We're seeing some divergence here. And a quick check on the initial balance calculation gives us a little bit of heads up as to where this is likely heading. All right. $88.25, $88.50. That's important to know. And your close yesterday, you closed at 89. All right. And oftentimes you see the market will gap to fill to the close. And with the initial balance being where it is, that's a good expectation of where this market may be headed. And we're just going to deviate for a second on discussing the premium to discuss the initial balance. Initial balance calculation is nothing more than the high and the low of the first hour of trading. And then we run a standard deviation, 2 standard deviations from those levels. And the market frequently will reach those levels before it makes a major pivot. And we keep track of that data. Fridays are your best day for expecting that the initial balance projection will get hit. In the last 3 months, 83.33% probability that will happen. Over the last 6 months, 88%. So yeah, that's a very likely probability. Let's look at the retracements. From the, well, let's see, we got to recalculate. From this high to this low, okay, you're looking at a 61.8 retracement down at 83. Okay. From this low to this high, let's take a look at that. Oh, that's 2808. 50% is 86.25. Okay, we're right where we need to be in order to start looking very closely at divergence. Okay, we come back to the premium and we see the dip in here. We're now at this level where we may anticipate looking at a long trade. Look at the averages on the premium. You look at the dip here, we're at 41. When this turns, where are we going to be? We're already lower. That means that we are continuing to move lower. We're not there yet. All right? 41, 40, 39, in fact, we're not there yet. We need to be at a higher low. We're going to continue to move down. All of this doesn't matter. Will we get some retracements? Yeah, very likely, but we're not there yet. All right, let's look at this carefully. You see where the premium was precisely at the low. We had a higher low here, it's evident here. But on the average, we're not there yet. Okay, that's a very good indication that this will continue to come down. And when it comes down to test that level, all right, we should be divergent because we're getting divergence on the premium now at 37. But that's that's where it's turning. This is not divergent. Pardon me, I misspoke. You look at this low, all right? 37, that's the lowest low we've had. Obviously, quite a bit lower than it is here. We've got to be at a higher low. So yeah, this needs to move up, then it needs to move down again. And when it moves up again on the next cycle, that's when we're liable to see a major move. Let me repeat that. The turn here at 37, we're not at a lower low yet, but all of the same. This is the lowest the premium has been on the average. So what we want it to do is to go ahead and move up. Spoos will move up, but then they will move down again. And when they move down, we should drop below this price. Okay, 87.50. We should drop below 87.50. And when we are, and the premium is above 37, that's when we take the long trade. We're back to recap the balance of today's activity. And let me start off by saying that I erred in what I said previously regarding this low. The average on the premium here was not set correctly, and I had to adjust that after the fact. But this now proves the point that this was the low. We said earlier that we were expecting it to come back down. That was because of a the slow-moving average here was not properly set. But now that we have to change that position. This was the place to go along. And when we looked at the retracements here from this low to the high of the morning, we came right down to the 61.8 retracement level at the pivot. So that was another obviously very strong reason to expect a pivot at that point. But now let's go back to the premium. And what I want to call your attention to is these particular lows right here, and the read on the premium, the raw data was negative 0.07. Then to this low, it was negative 0.04. And then finally, at this pivot, it's negative 0.06. I think these are negative numbers. Pardon me, they're positive numbers. I'm sorry, those are positive numbers. There's a dash there, it misled me. 7, 4, and 6. Okay? So obviously we're divergent in each of these instances. 6, of course, being, let me make sure I'm getting this right. Hold on. All right, let me say that again. That is a positive 0.07. This is a negative 0.04. This is a positive 0.06. So obvious divergence here. There's no divergence between this low, but it's an insignificant difference. Now, looking at the averages at this pivot, okay, 43 on JMA4, all right, we're at 43. Now we're at 45. And here we're at 47. So we are going up. Although the slope at that particular moment was down, we were going, the actual premium itself was averaging up at that moment. And that's the divergence that we were looking for a long trade. Now, let's take a look at the strategy. We didn't get signals right at that pivot, but the nearest signal that we got was right here. All right, this is obviously, we're too early because we haven't even come down to that retracement point yet. This signal happened at 88.50, and again the Fibonacci retracement was at 87.50, so a point away. But overall, the conditions were primed, as we could see on the premium, and especially right in here, as the premium dipped real low here and then quickly started to become divergent at the new low here. All right, so getting along in here made obviously good sense. Oh, and by the way, let's just look at that one more time. That signal, which happens right here, is right as we're coming down. Okay, we obviously wouldn't take a signal after this kind of a dip on the premium. We would wait until the premium became divergent. And that happens seconds later. So we were talking about a return to the high. And let's look at the end result. And now let's read the premium on the way up. So remember the principle. Higher highs on the ES, higher highs on the premium. If that's not happening, something's going to turn. So we start moving up. Here, premium begins to taper off, then turns again on the way up, tapers off, turns again, and then as we start going into these higher highs, here you see how the premium is dipping. That's going to pull this back. Doesn't mean that we're short, but there's a pullback in here. And rightly so, because the premium is obviously divergent as we move up to that high. So it pulls back a little bit, and as it does, look at what's happening on the averages. Here's your low, higher low in here, and from the standpoint of that low here compared to these other two lows, we're divergent. And up we go again. Here, here, here. Okay? This doesn't confirm, and we get a little bit more of a pullback. Not much, but it does pull back. Now, as we run up here, pardon me, right into here, okay, see what's happening to the premium? We get this little spike down. Okay, that's not good. That means right at this price, that's got to get tested. Now, doesn't mean it's going to get tested right away, but it does mean that it should be tested. Nevertheless, the premium on the average now dips. Okay, we were here at 44. Now we're at 24. All right. That price in here, okay, that's got to get tested. It winds up being tested right over here. Okay. Now that's not a big pullback, and we still needed to test that price. It didn't happen. But look at where the premium was. 24. Then over here, we're at 26. So we're moving up again from that price. That's something that we got to keep in mind for a pullback on Monday. Nevertheless, premium starts to move up again. Yeah, all the rest of this is just a lot of noise. You can see that the premium was climbing. It lost steam. We came down, started moving up again, and now the premium really starts to take off. That little low doesn't really mean anything. And this little pullback here at 27.9875. I think that's right. Yeah. And we get another pullback in here. We're around 2,800 in that neighborhood. So that winds up getting tested over here. And look at the premium here compared to where it is over here. We're moving up quite a bit. Look at the averages. We're still moving up. Even though that price gets tested, premium is moving up, so that confirms the long. And then as we move up to the high here, you can see how the premium now begins to tank and we get a pullback. End of day. But do we go back up? We hit the high in here at 2807. Okay. And let's go back to the morning. Whoops, a little bit too far. Where did we go? There's that gap that we said, oh, that gap's got to get filled. And it was. Went right back up to 2807. Filled that gap, and that was all it wrote. And we didn't get back all the way to a new high before the market closed. But after the market, it moved all the way up to 2808.25, which was right at, well, pardon me. Hold that thought. Yeah, there we are. That's after the close, up to 7.5. Some long signals right in here. Long signal there. confirming that we were still on the way up. So hopefully in this video, you've learned something about reading the premium. It's been a longer than usual video, but we really want to stress why we're here. We're here to use the premium to make our decisions. That's the primary tool. The rest of the indicators that we use are just to do some of the fine tuning, but the overall picture and the overall direction is confirmed by the premium. If you don't know how to read it, it's worth the education to learn. It is not that difficult to learn because there's such a simple principle there. It's a direct relationship. If you understand that, when the premium is not agreeing with the moves on the Spoos, the premium becomes a leading indicator, and you need to know what it is telling you in order for you to react properly. For more information, go to our website, or better yet, come and take a demo. Acquire the tools that you need in order to do this right. We can help, and I'm Rod Kusin and Spooman for Risk.